I think what we're seeing with the ultra high net worth is, I think, some amount of polarization in the way they're looking at their wealth. On one side, they are far more open and inventive about where they want to invest some part of the money, but this tends to be a smaller part of the investment surplus that they have. So you have a lot of ultra high net worth directly buying new businesses, even unrelated businesses where they have an interest or maybe a passion. On the other side, which tends to be the larger part of what they see as their core portfolio, currently we see them becoming slightly more risk averse than in the past. So, there the focus tends to be more about preservation of capital and making sure that on a real and net basis, on a currency adjusted basis, one is making reasonable return. But again, the focus is on protection of capital rather than really very aggressive bets. On the spending side, I think we've been seeing a bit more conservatism again. People have been slightly more subdued over the last couple of years. I think on the whole, therefore, a small pot for making some investments which are close to heart, a bit of a passion, or maybe something new that they want to do, and make an investment to try and see if they can get into that industry. But the core portfolio is a bit more modestly and conservatively managed right now. So our advice has been really based specifically on the need, and on the capital preservation side, I think fixed income, especially in India, has been a very, very attractive offering. The reasons being that rates have still been very attractive relative to the fall in inflation that we've seen. So for a reasonable period of time now, we've seen real returns in the Indian economy. Currency has been modestly stable. So even if we adjust for some amount of depreciation or plan for some amount of depreciation, even after that or adjusting for that, on a real basis, adjusted for any currency fluctuation, the returns are very, very attractive. Again, for those who don't have enough exposure to Indian equities, we have been overweight on Indian equities. So I think we think that as a market, India looks very, very attractive in the region. In fact, maybe among the most attractive, with the return of growth in India, with the return of monsoons being a reasonably good prognosis, with inflation being quite subdued for some time. Even if we build in some amount of inflation coming back from oil going up, even despite that, I think the market does look quite attractive. So both across the two large asset classes, fixed income and equity, I think India is very well poised. So this would be a good market to invest in.